this episode of Sweatin Money. We may or may not have ownership or other positions in the stocks mentioned on this show. Be aware of conflict of interest. Don't buy stocks based solely off what you hear from this podcast, and always do your own homework and research before investing in stocks. I'm your host, Kong. Gibson cannot be here with us today, so let's take a look at what's in the news. Inflation for the last year reached 2.2%, enough to keep U.S. Federal Reserve rate hikes in place. Goldman Sachs' stock hasn't been doing well this year thus far. However, they will be creating a new ETF called the Goldman Sachs Hedge Fund VIP ETF, which supposedly takes 50 companies with the best fundamentals that are used to hedge funds and lumps them into an ETF. Just to let you know, this is a hedge fund, not a mutual fund, according to Investopedia. Both are groupings of companies packaged into a fund, but exchange funds are allowed to take on risks with options. Their management fees are much higher and are only available to rich people with high net worth. A Yelp employee was fired after publicly writing a blog post complaining about low pay in the company. Yelp came out to say the firing was not due to the blog post and was for other reasons. They wouldn't directly address their low pay issue, but agreed to the high cost of living in San Francisco and said to address this, they are moving their customer support department, the department that the fired employee works at, to places with lower cost of living like Phoenix, Arizona, while still paying them at the San Francisco office rates. Bloomberg has an article describing how a lot of companies are using tactics to encourage employees to be more healthy in attempts to lower their healthcare insurance by deducting salaries of people who don't follow a workout schedule. For those who have been complaining about how jobs have been lost to the PRC over the past 30 years, their complaints are worth noting. However, what happens when Chinese firms are now setting up shop in the US because it's actually cheaper than setting up shop in the PRC? Personally, I think it's a bit scary. The influence of the PRC capital into this country is worrisome enough. The fact that the U.S. is still filled with a population of people who are begging for Chinese jobs indicates that we have not successfully transitioned from a manufacturing economy to a services-based economy with a high-quality services sector like tech and finance. This would also explain why we are trying to push the Trans-Pacific Partnership, TPP, which makes other countries respect and follow the U.S. model for copyrights and trademarks, while at the same time expanding the lifespans of copyrights and trademarks well beyond the lives of the original author's own lifespan, so that companies can continue to profit off of old works, stifling innovation and new inspirational work. And when a country stops innovating, its future looks bleak. Now, over the years, you get a preview of the next slide. Now, over the years, because China has taken on a lot of the factories wanting to set up shop, it's become the world's largest polluter and has been drastically criticized by the West. However, when you look at the carbon emissions divided by population per person, China's pollution levels are actually much lower, while Americans are the most polluting. On top of that, because it's the developed nations that who have outsourced their factories and thus their pollution onto the Chinese. Now, can the PRC actually clean up the environmental mess in its country? We have yet to see. Some believe it can because because it'll make the PRC Some believe that it can, and this sort of coverage is going to make people in PRC kind of feel uplifting, and maybe they can. Now, you hear a lot of parallels to Britain in the 1950s, as was implied in last year's now banned documentary Under the Dome, or 穹顶之下, by former CCTV anchorwoman Cai Jing. Another large polluter, the mining industry, has seen a large boom recently, but just like the stock markets, it's been in the midst of choppy waters. As worries over the stock market and economy increase, gold prices and thus gold mining companies' values are increasing. However, when the stock market rises, the gold mining industries have inversely fallen. Bloomberg says that they may be forced, maybe in for more instability and headed for a downtrend. Especially when platinum is valued lower than gold in the commodity markets. From a famous skit, you gotta diversify your bonds. China is coming up with another round of government support to ease its economy and is selling a new round of bonds. The question at hand is whether or not these bonds are worthy or are they filled with bad debt. Let's take a look at the week in review. Monday came around and began a 3-day rising streak before falling back slightly on Thursday and Friday. Now, we are recording this podcast now on Sunday, so let's take a look at some of the international markets, specifically Japan. They actually opened lower from their Friday levels. We're waiting on the Shanghai and Hong Kong stock exchanges to come up here. But meanwhile, let's look at Korea. And Korea was kind of doing the same thing, if you noticed at the end here, this last third here. They also opened lower on Monday. A lot of people were selling because they were trying to cap in or take in the profits that they gained on Friday. This new segment, well, we're going to skip this for now because I have a few things I need to figure out. So let's move on to recommendations. Tasty Trade. I've been playing around with options lately and with mixed success. However, there are some good tutorials on Tasty Trade that can explain the basics of options trading. And that is it for now. Once again, we may or may not have ownership over the positions of the stocks mentioned on this show. Don't buy stocks based solely on what you hear from the show, and always do your own homework and research before investing in stocks.